Hello, everybody. Good evening, good afternoon, or good morning, wherever you are in the world today. My name is Alex Tapia. I'm the president and the founder of Aviation Retirement Strategies. And thanks for joining us on this mid-year investing outlook for 2023. As we review the last 6 months of the year and we look forward to the following 6 months of the year, there's a lot of optimism around here about the kind of year we've experienced so far in the first 6 months of the year. Now, last year was a pretty challenging year, so to speak, in all aspects of the market. And a lot of people towards the end of the year, especially, we're talking about a recession in 2023. Regardless of all that, we've actually had a pretty good year looking back, but it's certainly not because we haven't had any road bumps along the way. We have had some uncertainties that we had to contend with in 2023. And so far, if you remember, we've had two major banks that eventually ended up collapsing, and a third one in May. And collectively, these banks represented roughly $530 billion in assets. And these banks actually rank as the second, third, and the fourth largest bank failures to date that we have actually experienced. And also, we had to deal with the last-minute deal to raise the debt limit to avert a default on the U.S. government. But despite all that, the financial system today is actually pretty stable in contrast to the negative aspects of the first half of the year. Inflation is actually now under 5% in comparison to last year, where it was at 8.7% at the same time this year. We believe we have reached an apex in the rising of the interest rates going forward, which is going to mean some positivity for our outlook for the rest of the year. And it's also shaping up as a guide to our perspective for the following 6 months and also into early 2024. Now, this does come with certain opportunities for investors, potentially in the international equities and core bonds, should also the Fed, in fact, be done with raising interest rates for the year. And there also may be some opportunities in the industrials as well, just to name a few. Now, on the flip side, there are also some uncertainties out there as well, with the possibilities of a recession being at the top as one of the biggest questions of when, how long, and how significant it could potentially be. Now, personally, if one does occur, we feel it will be somewhere in the mid-range at worst. And although nobody really knows for sure, we do know two things for sure. First is the fact that we have already positioned your portfolios to reflect the current state of the economy. And second, as things unfold in any direction, your portfolios are nimble enough and fluid enough, as they always are, so that we can adapt to any possible scenario that plays out in the future. Now, in terms of the economy as a whole, we're fairly certain that the Fed is going to stop its rate hike program pretty much towards the latter part of the year. We're anticipating that it's going to be a pretty favorable thing for a lot of the stocks were basically battered last year in 2022 during the Fed's aggressive rate hike program. Now, specifically, we're talking about the U.S. large cap growth stocks. So we're looking forward to those continuing to recover due to the Fed's ending of its rate hike program here in 2023. Now, on the other hand, the jobless market was actually pretty good last year, which is one of the main reasons for not going into a recession in 2023. As I've said many times to many of you during our conversations, a recession is highly unlikely when anyone is able to get a job when they want to. So what we're looking at right now is that there's a potential that the job market may start cooling, which is going to force the Fed again to start loosening up its rate policy. And that could be a potential catalyst for a small recession towards the end of the year or maybe early in 2024. Now, as far as equities are concerned, we believe that inflation has receded basically interest rates are going to have stabilized. And this is still the top of mind for a lot of investors as a potential for a recession that's on the horizon. However, due to the fact that we have improving inflation conditions, that's going to help investors navigate towards a recovery if, in fact, the recession does happen in late 2023 or early 2024. Now, as far as individual companies are concerned, also, we think that earnings will decline as we head towards the end of the year. But we are expecting solid revenue growth from them, as well as stable profit margins, which is going to help mitigate any negative effect from a decline in earnings that these companies are going to experience in the latter part of this year. On the bond market side, specifically the long-term bonds, we are expecting a recovery in that sector due to interest rate hikes no longer being necessary. Now, if you remember last year, long-term bonds saw a drop in approximately 13%, which is in the range of a pretty extreme for the bond market. We have already started seeing a recovery in that sector, and we expect that to continue to improve. And we have already started adapting to this scenario from the last portfolio reshuffle that you did, as you might be aware, and we will continue to monitor that sector very closely to make sure that we don't miss the recovery from the expected Fed policy going forward. Now, all in all, we are pretty optimistic about what 2023 holds for the rest of the year, and we're not really looking to make any major changes in our portfolios, at least for now, until we see something different on the horizon. We know all the potential risks that are out there, but we also are aware of all the positive things that could happen. So we want to make sure that we take advantage of that, but certainly be ready for any moves that we need to make in order to protect the portfolios in case something bad does happen. But right now, we're seeing things as pretty positive, and for the most part, everyone else does too. So for now, if you have any questions about your specific portfolio, your specific situation, as always, please feel free to give us a call. We're always available. But thank you for listening. We look forward to talking to you, and we will talk to you soon. Have a great rest of your year, and enjoy the rest of the summer as well.